could begin by asking you, what are your roles and responsibilities as Chief Financial Officer at SABMiller?
In a large listed company, the role of the Chief Financial Officer has been broadening and becoming more complex over the last couple of years. And that's mainly to do with the increased sophistication of the financial and capital markets, as well as the growing burden of increasing regulation around reporting and governance. And essentially and simply put, I see my roles split quite easily into those which are externally focused and those which are internally focused. If you look at the externally focused roles, engaging with the capital and financial markets is a major one, and what I mean by that is the discussions that we have on an ongoing basis with shareholders, institutional investors, analysts, banks, also our debt holders. It's important for us to know that they understand our strategies, they understand our business model, and they understand the risks in the business. There's also the credit rating agencies, and they rate our public debt in the capital markets, and because they do that, that affects the price of our debt, and therefore they need to know the strengths of the company. Secondly, there's the whole financial and strategic support for the board and also for our Chief Executive, Graham Mackay. And there it's important that I supply the financial input about what is happening in the business. I think from an internal point of view, one of the major issues there is the governance, which has increased tremendously over the last couple of years. There's the whole issue around risk management, corporate governance, and that's created quite a lot of work in the finance function, which wasn't there over a period of about 5 years. And then there's the normal issues you would expect of leading the finance function, and that results in spending time around developing the finance function, and also at the same time making sure that the integrity of financial reporting is there.
You're currently investing to support the growth momentum of your businesses. So how are you financing that program?
Well, at the moment we have a significant capital expenditure program going on around the group. I announced at our last interims announcement that we would be spending about $2 billion during the course of this year, and that includes a complete bottle upgrade in South America and also in South Africa, and that will be taking place over the course of this financial year and the next financial year. Now, fortunately, the business is very cash generative, and as a result of that, we produce about $4 billion in operating cash flow, cash generated from operations, we call it. And we have also a very strong conversion of that into free cash flow. So we managed to finance all of our capital expenditure from our internal cash flow.
You describe yourself as an industry consolidator. So what financial criteria do you use when making medium or large acquisitions?
Well, over the last decade, I think we've been one of the major consolidators in the global beer industry. And we've made many acquisitions, and I think we've created significant shareholder value during that period of time. We follow a fairly disciplined approach. We have strategic, commercial, and financial criteria. And when we apply our financial criteria, the main one of which is determining a weighted average cost of capital for every project. And we ensure that the feasibility study actually more than meets the weighted average cost of capital. So the return must be ahead of the weighted average cost of capital. And we'd like to go EVA positive, either in the 5th year and certainly no later than the 6th year. Our standard is that we should reach EVA positive by year 5. We also have a criterion to do with earnings, and there we'd like to become earnings positive by year 2.